Hello, everyone. Welcome to this evening's presentation on insurance that is brought to you from the National Foundation of Credit Counselors Faith-Based Alliance as part of our Economic Empowerment Series. The partners in this endeavor include Mount Zion Baptist Church of Philadelphia, Enon Tabernacle Baptist Church of Philadelphia, Diversified Resource Network, and Freddie Mac. And I am a housing outreach manager. I am so happy to be a part of this endeavor and to bring this content to many churches and community stakeholders to decrease the wealth gap. Freddie Mac is a secondary mortgage company, but we care deeply about the sustainability of homeowners and decreasing the wealth gap. That's why we have partnered with all of the alliance leaders that you see on this page. And at this time, I'd like to bring forward Pastor Cedric Jones so that he can speak to you.
Good evening, everyone, and thank you so much, Ms. LaTanya Gonzalez. As mentioned, I'm Cedric Hughes Jones Jr. I am the senior pastor of the Mount Zion Baptist Church of Philadelphia. So if there are any Philadelphians on the phone, that's wonderful. I grew up in Charlotte, North Carolina. Also have spent time in the Midwest as well as the Northeast, where I met a friend of mine who is the vice president of the National Foundation for Credit Counselors, Armand Palmer. Let me say it this way. I pastor a large urban church, and we have a diversity of members. There are members that are doing well. There are members that are struggling day by day. But no matter where we are in our economic life, our vocational life, we at least need to be mindful of protection. Protection. In ancient days, biblical days, that protection was often rooted in relationship. So, for example, if you are looking at the book of Ruth, an Old Testament book, and pardon me if some of you who may prefer the term Hebrew Bible, but in either case, there is a book that tells the story about a woman named Ruth. But I wish to talk more about her mother-in-law, whose name is Naomi. And so Naomi had experienced some difficulties in life. She buried her husband, she buried 2 sons, and she did that while she was away from her ancestral home. And so when she went back, she had need to try to start again and figure out how to propagate the things that she felt like she could at least access. I'm speaking in general terms so that this doesn't become a Bible study, but I simply want to say it like this. The relationship that she had built with her daughter-in-law, Ruth, ended up being a form of security. And so the way I look at it, no matter what level of resources that we have or could have, all of us need at least some kind of plan for security, perhaps some kind of plan for when things don't go the way we expect. So in ancient times, it was rooted, particularly in patriarchal cultures, it was rooted in relationships. These days, we don't have to be dependent simply on relationships like Naomi was, or that Ruth, her daughter-in-law, was. We can access financial instruments to do the very best we can with what we have and what we wish to pass on. And so I'm not the expert at all in insurance products and do not claim to be. I simply want to, from a faith perspective, say that it's important that as we think about our lives and our families and our legacy, that we get the kind of information we need to do the very best with what God has blessed us with. So that's why, for me, being involved in this economic empowerment series with the National Foundation for Credit Counseling, Armand Palmer, a graduate student classmate of mine, as well as Tanya Gonzalez and others who are part of this found together. And I'm certainly grateful that we're not the only church that is here, but we're connected with a sister church here in the Philadelphia area, widely known church, the Enon Tabernacle Baptist Church. Herman Palmer is a driving force with us in bringing us together. And so I will have concluded my comments that way and simply pass you over to Herman Palmer.
Thank you, Pastor Jones. I really appreciate you. I really appreciate my colleagues. I want to say good evening to you and welcome to this evening's Life Insurance Overview presentation. This is part of the National Foundation for Credit Counseling's Faith-Based Alliance, our Economic Empowerment Series, the partners of which have already been identified: Mount Zion Baptist Church, Enon Tabernacle Baptist Church, Diversified Resource Network, and Freddie Mac. I want to start by thanking our planning committee, our presenter, our sponsors, Wells Fargo, Freddie Mac, TD Bank, and you, our listening audience. Before we get started with tonight's presentation, I want to tell you a little bit about the National Foundation for Credit Counseling, or NFCC for short. We were founded back in 1951. We are the nation's first and largest nonprofit dedicated to improving people's financial well-being. Our mission is to empower consumers to address their financial challenges and take charge of their futures. We've got over 300 member agencies in all 50 states and Washington, D.C. and Puerto Rico, with over 50 member agencies and over 1,200 certified counselors who are ready, willing, and able to help. The goals of our organization is to help everybody. Our clients include multicultural communities of color, the underserved, military families and veterans, small business owners, and student loan borrowers, just to name a few. The areas in which the NFCC offers counseling support include general financial counseling, housing counseling, small business owner coaching. We have student loan coaching and bankruptcy counseling. Now, I'm excited about this evening's presentation because I think it is a subject we all need to understand, and when managed appropriately, can play a critical role in our ability to maintain the quality of life and the standard of living of our loved ones when a family experiences the loss of a loved one, or when a business experiences the loss of a key contributor. Our presenter this evening is Mr. Eugene Mitchell of E. Mitchell Enterprises, LLC. Before I turn it over to Eugene, I want to review some important ground rules. I want you to know this is a safe space, and it's been provided for all in attendance to get access to the information they need to achieve better outcomes. What that means is this: there's no judgment here. Anybody can ask a question. If it occurred to you, chances are the same question occurred to 3 or 4 others. You tuned in for a reason. Help us help you get answers to your questions. If you don't ask, we can't answer. There are no dumb questions. Let me also share, there is a brief survey connected to this session. Please help us out by responding. We want to hear from you because we want to present content that is relevant to you and where you are in your life stage. Now, with all that done, it's my pleasure to introduce to you this evening's speaker. Eugene Mitchell is president and CEO of E. Mitchell Enterprises, LLC, a financial consulting and services firm. He is also the author of a book, Closing the Racial Wealth Gap: 7 Untold Rules for Black Prosperity and Legacy. Prior to starting his own company, Eugene spent nearly 2 decades as a corporate vice president and African-American market manager at the New York Life Insurance Company. He was responsible for developing and executing the company's national recruiting, sales, and marketing campaigns within the African-American community. He also oversaw and supported the development, retention, and promotion of over 1,500 African-American market agents and managers. In 2011, Eugene developed and initiated the 50 Billion Community Empowerment Plan, an initiative to accumulate 50 billion of in-force life insurance intended to create a strong and sustainable intergenerational wealth stream within African-American families, businesses, institutions, and organizations. On July 30th, 2017, Eugene and his team crossed the 50 billion milestone. This is a bad man. Please welcome me as I welcome our presenter this evening, Mr. Eugene Mitchell. Eugene, please talk to the people.
Thank you. Good evening, family. It's truly an honor and a pleasure to be here with you tonight. Thank you, Herman, for that invitation and the introduction. Because you didn't need to read the whole bio, but I appreciate that you did. Thank you, Pastor Jones, for the biblical context and the importance of this particular topic. I want to thank the whole NFCC team for your commitment and the work that you do. You're having a great impact on a large scale, and I think of you as agents of change. And lastly, I want to thank each and every one of you for dialing in tonight, to taking time to attend to hear this session. I'm just so excited to be here to share on this timely education session on insurance. Yay, insurance. Okay, no, but seriously, I know it's not usually an exciting topic, but I plan to bring it to you differently today, okay? I'm not going to talk to you about the old boring definitions and the likes, what it is. I want to talk to you about what it does and how those who know what it does use it to empower themselves, their families, and their communities. I'm especially passionate about using it in ways to create and build wealth and create financial legacies for ourselves and our families. I know Armand said about using it to maintain a standard of living. With my 20 years of experience here, I think there's so much more that we need to know, right? I've actually, over those 20 years, sat in a unique corporate position, watching how other races, religions, and ethnic groups use these tools and strategies to build wealth for themselves and their families in ways that we've not been doing to the same degree in the Black and brown communities around us. Right? I've seen some really creative ways around this tool of life insurance, especially. And I want to share some of those with you today to add just another tool to your financial toolbox. And just to let you know, it's good for everybody to use, not only the target markets that I was focused on, primarily the Black community. You see, some families, get millions when mommy and daddy or grandma and grandpa pass away, while others may get $5,000 or $10,000 to cover the cost of the funeral. We see way too many people passing the plate, right? Using GoFundMe to raise money to bury someone, right? And this, for me, makes it just another contributing factor to the racial wealth gap, right? When you talk about inheritance and family financial support, many of us are not participating in the same way as others around us. So what I want to do tonight is pull the curtains back on the lack of information, the misinformation, and the distraction that many of us face, right? Because when you know better, help me now, when you know better, you do better. So let me take a few minutes just to share my career journey with you, and I'm going to elaborate in 3 points here that are on the slide. I like to start off by sharing that my passion and the purpose for the work that I do really was inspired during the 4 years that I spent in prison in my early 20s down in Miami, Florida. Okay, let me clarify. I was a corrections officer, a prison guard for 4 years down in Miami. But where I go is that, as I stood there and I looked out amongst the majority Black and brown inmate population, I often wondered, why is it this way, right? And I started to question the things that they talked about there are the issues and the problems in Black and brown communities, the crime, the drugs, the non-nuclear households. Were those really the problems, or were those symptoms of a deeper rooted problem, which had to do with our economics, right? So it's a lack of guidance, lack of direction, lack of financial resources. I often wondered, if many of those guys there had been set up with a college savings plan early in their life, would they have had a different path that they were on? Right? If they had been given startup capital for a business, would they not have been out on the corner hustling? Right? What if they'd been given a down payment for a home? Would they have had a different level of pride and purpose in their life? And I wholeheartedly believe so. But I knew I couldn't do much about that as a corrections officer. So I went back to finish my degree in finance, right? And then I went to get to NYU, started school of business to do my MBA. I got hired into a large insurance company, but I sort of fell into it during the recession of 2001. But it happened to be and show up the calling on my life, because in that group that I sat amongst, watching what other communities were doing that we were not to the same degree, I realized, these other folks around us are no smarter than you and I, right? They're no harder working than you and I. They've just been set up differently. They've just been shown how to use financial tools and strategies in ways to multiply what they had, right? And in ways that we would never brought into to view or to understand, and I think in many cases by design. So that started me off on this journey to figure out what we've been missing, right, that others have been doing. And so really that became the foundation of this unit that I put together to support 1,500, or it was 500 when we started, it was 1,500 by the time I left, African-American agents and financial advisors, right? And so the work that we were on and the work that we did was about trying to create financial stability, economic opportunity, and multi-generational wealth. And I'm going to tell you later on about this $50 billion community empowerment plan, which was about touching 200,000 families and making sure that they were set up and not set back when something happened to a family member, right? And I guess for me, the unique aspect of this plan and as we promoted it, it was about a collective vision and destination to create $50 billion. See, because that is what really resonated with our audience and got everybody on the same page. This is about something bigger than each of us, right? You take it back in our history, you think about, the movements of people moving to do things greater than themselves. This is what this was about. I want to share more with you about this tonight, right? And talking about sort of even those who had minimal levels of education, financial experience or exposure, that this got everybody on the same page. And so what I want to do is to take this from a creative aspect, right, about what we can do with these tools. And I'm going to provide some real life examples that hopefully will resonate with you tonight to really put the spotlight on what the possibilities are in not only this tool, but in also the career. And so where I'm going is that, next slide, I believe that this seminar is extremely important and timely with all that we've got going on in the country over these last 4 years. Right? I'm referring to the 3 crises that we remember in 2020 and 2021, the health crisis, right? The economic crisis and the social justice crisis. I mean, that took us the wind out of all of our sails. And I know that hearing the statistic of eventually crossing 1 million deaths due to COVID-19 here in the US shocked us all. Right? And then even in 2022, last year, 2023, this year, we've seen increases in crime, unusual calamities, record inflation, right? There's talks of recession is still in the wings. The most shocking, I think, and heartbreaking for me more recently have been the ongoing mass shootings affecting everyday life in all areas of the country. So what I say is that, we must look to find clarity in all of this tragedy for what we can do, what we must do to protect our families and our finances. Next slide. See, when we analyze the component parts of the crises that I just mentioned, right? All these unfortunate events that are happening around us. There are specific financial issues that we can point to that affect the ability of some impacted families to better deal with these situations and to adequately recover from them. Right? In fact, the root cause of the disparate impact that many families feel as compared to others can be attributed to their lack of financial, or their financial instability or the lack of stability and their lack of financial resources. Right? When you look at the healthcare, lack of insurance, the underlying conditions, the environment, right? You talk about economics, the lack of home ownership, the student loan crisis, retirement savings at a minimum, social justice crisis. When you have resources and funds that you can pull from, it makes your path and the impact that you have on that path very differently. Next slide, I want to talk about the racial wealth gap also contributes to the disparity in experience, impact, and the ability to recover from different families across the nation. See, for those of you who didn't know, before COVID-19, the average white family here shown on the chart had 8 times as much wealth as the average Black family. The Survey of Consumer Finances in 2019 reported that whites had $189,000 and Blacks just $24,000 when you subtract all of their liabilities from their assets, right? You take away the mortgage from the home value. If you take away the car loan from the car, your investments, all the loans that you have, the credit card debt, the student loan debt, when you take that away from your actual assets, this is what's left over. This is your actual wealth. Right? This is the basic formula there. How wealth equals assets minus liabilities. Where I'm going is that it shows a wealth gap difference of $165,000. And I'm sure it's gotten wider because of COVID, right? You see, when you think about, when the world shut down, people got laid off. If all you have after if you can tap some of this wealth that you have, the home equity and so the investments in your 401k, if you had $5,000 in expenses each month, If you only can get $24,000, that might be 4, maybe 5 months that you can go on before you're totally out of money. Whereas the average white family with 189,000, if they were to get laid off and they need to tap their resources, could go 3 years tapping that $189,000. That's one of the contexts I want to, just share with you about why wealth makes a difference, how it sets other families up so differently to make decisions and to act differently because of the stability that wealth provides. And one last point of urgency before I get into the breakdown of the insurance piece here, I don't know if you've heard, but the greatest transfer of wealth in history is coming. In fact, it's here already. Next slide. It's happening. $68 trillion is going to transfer from the baby boomers retiring and dying over the next 20 years. Okay, they will be passing their wealth, their savings, their homes, their investments to their children. They could be paying taxes and donating to charities. And many of us in the Black and brown communities not only need to understand this, but we also need to participate at the same rate so this racial wealth gap doesn't get bigger, because there's this new infusion of money going into these other families and communities. And where I'm going with this is, if you don't have some of those investments, if you don't have those things to pass on, you can create it with this tool of insurance. I'm going to share with you how we can do this. So all of these things that I just described, right? And it inspired me to write this book, especially after creating and completing that campaign at New York Life Insurance to put $50 billion of life insurance in force by the Black agents for the Black community. It inspired me to write this book, Closing the Racial Wealth Gap, 7 Untold Rules for Black Prosperity and Legacy. Next slide. It's about me sharing my real insight, experience, and successes in building, protecting, leveraging, and passing on wealth, especially for the, like I said, the Black families that we were focused on. Right? I don't want to brag, but it's a really great read. So if you don't have a copy, I invite you to go to the website, eugenemitchell.com, go to Amazon to pick up a copy. You see, because the way I've laid it out, the way I've structured it, it begins with the foundation of wealth building for ourselves as individuals. I'm talking about having the right mindset and confidence first, before we can start managing and investing our money. Then I share about what we can do for our families within 3 generations, our parents, ourselves, and our children, 3 generations right in front of us. And then how we can work together to strengthen our community economics, to cycle our dollar to make it go as far as it can, right? And to create and contribute to charities and endowments like the great organization we're part of tonight, all while providing a positive model for our children to follow. You see, I don't believe that we should be here working to close the wealth gap incrementally, right? One study said it's going to take 228 years for the Black community to reach the current level of the white wealth if we don't do anything different. I don't know about you, but I don't have 228 years to work on this. So I said we have to catch up a different way. We need intentionality to fix it and something to catapult us forward. And so with the time that I have with you tonight, I want to touch on 4 of the strategies from the book, 1, 2, 6, and 7, because I think these things in particular can help us catapult forward. Rule number 1, know yourself, know your worth. The book going to touch on. Number 2, insure yourself to ensure the future. Number 6, rich people plan for 3 generations. Poor people plan for Saturday night. And rule number 7, a rising tide lifts all boats. All chapters are important. Like I said, get a copy of the book, please. If you don't have a copy, like I said, you can go to Amazon or eugenemitchell.com. And just to let you know, these are things that are exactly what I'm doing for myself and my family to make sure that our future is going to be secure. Right? My wife, my children, my children's children, we don't even have yet. This is about setting up, as Pastor said, the resources to make sure that we're fulfilling for generations to come. So next slide, I want to talk about the first rule here. Know yourself, know your worth. See, I start our conversation here because I believe that before we go into wealth building and legacy planning strategies, even talking about insurance, what we do with our money, where we invest it, we must first learn to value and appreciate the biggest asset in our lives, which is ourselves. So, right? Not our car, not our home, not our 401k, it's us. See, this starting point for many of us have been missing, especially in the Black community, right? It's been, I believe, by design over the last 400 years, right? To not understand your value, your contributions, but what you stand for and what you contribute to the country. You see, where I go is that by valuing and appreciating our biggest asset in our life, ourselves, it will help us to see a new future for our lives. Whereas on the opposite side, not understanding our value leaves us open to being manipulated, searching for validation, or having lowered hopes, dreams, and aspirations. It's interesting that over time, there's been such a slow evolution of this concept of understanding our value. You think back to the 60s, right? And maybe it's a value gap or a value problem we have. In the 1960s, Reverend Jesse Jackson had the rally cry, just to get us to understand, I am somebody, right? I am a man. In 2013, it was the Black Lives Matter movement that was created after the killing of Trayvon Martin. So just understand and recognize that Black Lives Matter. Where I'm going is that as much as I support the Black Lives Matter movement, I say we must understand that we matter and now talk about what a Black life is worth, right? Because this conversation on personal economic value is really important to me as a Black man in America. Because for many years of my life, right, I was misguided to believe that my value was tied up in two external things, right? Either the title I had on my job, the VP of whatever, and or the belongings that I could show, right? The cars, the clothes, the jewelries, the bags, all those depreciating assets that many of us are misguided by social media, the athletes, the entertainers, right? The social media, the reality TV that are encouraging us to spend more and more of what we have, to look a certain way, right? To feel a certain way, to impress people that don't make a difference. But that's not who we are in the world. Right? So what I'm saying has to do with changing our mindset. See, then we can change our spending and investment habits. This is where I'm teeing this up to go. If you don't know what you're worth, and your decisions might not be the best, and your expectations might not be the highest. Next slide. See, let me take a second just to tell you a quick story about when I first, found out a way to calculate my value, or how valuable I was to somebody else that I didn't see. My first experience on hearing my own economic value, I guess you could say. It was at that insurance company that I worked for. See, I started in this leadership development program, right? And it was a 2-year program. I rotated through different departments. And when I came out of this program, I got promoted to an assistant vice president. And then I got a letter in the interoffice mail that said, congratulations on your promotion. As a newly appointed officer of the company, we want to take out a $2.5 million life insurance policy on your life to benefit the retirement fund of the company. Wait, I was waiting for me and my family, nothing to do with me, just we want to take out a policy on you to benefit us at the insurance company. So I said, what is this? I started to ask around. They said it was common practice around here. I said, well, I've never heard it. They said, what do you mean you've never heard it? This is, what we're talking about, the ways that we can benefit as you move up in the company and you earn more and you get more benefits, but the company's also going to do things to benefit themselves as well. Here's one of the ways that they do it. I said, really? And so what they said, the idea is that, if anything happens to you, they said they call it corporate-owned life insurance. Or bank-owned life insurance. Banks do it too. Call it bank-owned life insurance, COLI or BOLI. I said, like I said, I've never heard it. They said, well, you might have heard it in the context. We're talking a lot of churches on the line here in the way of a church, a key man policy, where we may take out a policy on the life of a pastor and or the head of a small business in case anything happens to the pastor or the business, that the company, the church can go on and not be too affected by the loss of revenue from that person being there. So we call it a key man policy. I said, well, I guess I get this concept of a key man policy, and it's great that the company thinks of me this way. But let me ask you a question. Where does this $2.5 billion come from? To which they said, well, that's what the company values you at. I said, again, I don't get it. To which they say, well, they say that's what you're worth to them for the work that you do. So tell me more. They say, well, here you are, 30 years old, right? Making $100,000 a year. We expect you to work here another 25 years at least till you're 55, or maybe you're ready to retire. So what's $100,000 a year for 25 years? $2.5 million. They said that's just the base of what they're going to pay you, right? Without raises, without bonuses, without promotions, just the salary component, as keeping it as a straight line of 100,000 for the next 25 years. What you do, who you are, what you bring to us is worth $2.5 million. We're just looking at it as a large lump sum, right? As a company that's been around 200 years, that's what they can do. They can strategize and plan out on what they're expected to pay out in the way of salaries over the next 25 years. And what a shrewd way to think about the offsetting the salary they're going to pay is by using a policy that they're going to pay a few $100s a month on to offset the $2.5 million that they're going to get back. To which they said, what do you mean you've never thought about this? Haven't you thought about how you're going to invest that $2.5 million over the next 25 years? To which I said, no. Right? They said, what do you mean you've never thought about this? You have now you're married with small children at home. Don't you have a $2.5 million policy on your life to protect your family in case you don't make it? Make sure that they receive the $2.5 million. To which I said, no. But then I became extra sad because what I realized was that the company valued me more than I valued myself. Right? And in the sense that it took me a long time to buy that much insurance on myself because I didn't believe my value and worth was that much. And that's strong. So where I'm going is that, based on that formula that you see here, current salary times the number of years to work to retirement, that's the present value of your future earnings. That's one of the ways that you can calculate your value and your worth. This is what we're sharing with our children. We have 2 boys in college right now. I say to them, you know what? If you come out at 25 years old, making $75,000 a year, by the time you're ready to retire at 67, you would have made $3.15 million in your lifetime. I want you to think of it that way so you can think about what you're going to do with that money. Make sure that you're just not spending it, that you can multiply that right into the future. For those of us on the line, closer to 40 years old, making $50,000 a year if you go across. That's $1.1 million, but it's still left to earn. See, the important part of recognizing this value is that it's tied to me being a producer, a contributor, and a builder in life, rather than being a consumer. Like I said, many of us are trying to get value and appreciation from or validity in what we have, and that's not what this model does here. See, this number shows the total of what you're going to be paid over the years, and with this calculation, I think it's quite clear on the board here, we are all $1 million assets. Where I'm going is that when you look at it this way, we have real economic significance, right? And that's important because from this perspective, the loss of the life of another Black man or woman to the hands of police violence, or to Black on Black crime, or to the hands of a disease like COVID that we just said had 1 million people in America pass away from. It impacts us beyond just the physical and the spiritual. It impacts us economically, right? And I have to mention George Floyd, God rest his soul. He was 46 years old when he passed. 46 years old. If he was making $50,000 a year, he might have worked until he was 66, another 20 years. $50,000 a year for 20 years is $1 million. That's $1 million his family won't receive because he's not here earning. That's what we talk about with what was taken away. Brother Tyree Nichols was 29 when he was murdered. You see, when you think about it, he had maybe 30, 40 years to work. How much that has been taken away. The next point of knowing that we are $1 million assets is where I'm going. Next slide should be that it inspires us to take better care of ourselves, right? Think about how you would take care of any other $1 million asset that you own, right? Think about $1 million car. Here we go. This is insurance. What's the first thing you have to do before you drive off the lot? But you would want to do it anyway. The first thing you would do is insure it, right? And what about $1 million house, right? The same thing. Oh, let's go back to the car. First thing you would do with the car and taking care of this $1 million asset, you'd insure it. You keep it in the garage, right? You'd keep it washed and shiny and looking beautiful. You'd have the alarm. You go out to the mall and probably park out in the middle of nowhere. You see those cars out there, those expensive cars, so nobody can touch it. That's how we take care of some $1 million assets, right? Think about $1 million house. What's the first thing again that you're going to do? Insure it, right? Then you same thing, alarm. You'd have the pretty decorations. You might live in one of those communities with the guard at the gate at the front, so your cousins can't come by unannounced. But that's how we will think about and value these other $1 million assets. Same thing, $1 million racehorse that you put out every week, right? To run in those beautiful races, make your money. What's the first thing you would want to do? Insure it, right? But also, let me ask you a question. Would you allow it, this beautiful racehorse, thoroughbred, to stay up late nights smoking and drinking? How about eating fried food? Not exercising or going to the vet on regular visits? So do you understand how we would take care of these other $1 million assets sometimes better than we do take care of ourselves? You get where I'm going with this, right? So what I'm saying is that we have to truly value ourselves and each other. As strongly as we advocate for others to value our lives, we have to show how much we value our lives by protecting ourselves and our health, right? And our families and our communities economically. Next slide. To summarize all this here and taking care of our $1 million selves, I said we can focus on, and need to focus on, having better diets, exercising, right? Those regular health checkups. Come on, health is wealth too, right? And you have to be here and have to be healthy to enjoy life. Next one is about addressing our underlying conditions. Or as COVID showed us, they call them comorbidities. When you have that diabetes, the hypertension, the obesity, right? Those were what they were saying were factors are going to possibly make you pass quicker in conjunction with the COVID-19. We have to make sure we take care of those. We don't let them we just laugh about them or just accept that we have the sugar, we're overweight. We have to do what we can to take care of that. I said we have to make sure that we have no more reckless behavior or making poor life decisions. As $1 million asset, I have too much to lose now, thinking of our mindset this way. And then, of course, we talk about being more selective on our life partner. The joke I often say is if we had that $1 million racehorse, right, $1 million racehorse, would you allow it to hang out and mate with the donkey down the block? I'm just saying, thinking about our value and our worth, right? Who are we partnering with? Who are we building our life together with? Right? Because when we're $1 million assets, we can raise our expectations for our family and our children. Right? When I look at my children, if I'm going to earn $2.5 million and pass that on to them, I'm going to make sure that they do what they're supposed to be doing to make sure that they are set up and taking care of what they have and passing it even more on to their children to come. Lastly, it's about raising our community expectations. Right? Think about us all as $1 million assets. Right? Thinking about how we can support one another and encourage one another. That's where I'm going with this. Because with this, like I said, is the foundation to build from. When you talk about this, next slide, conversation of insurance, a major missing piece that I want to introduce tonight, like I said, watching what other groups are doing around us, they're focused on insuring yourself to ensure the future. Insure yourself to ensure the future. See, when you think about those other $1 million assets, right? We said, what's the first thing you do with the car, the house, the horse? You're going to insure them. But let me ask you, would you insure them for anything less than their true value, their true replacement value? If you have $1 million car, you get into an accident, what kind of car do you want back? Do you want the old beat up Hyundai? No, you want the same car back. If your $1 million home was to burn down, would you want a trailer home to give it? No, you want the same replacement back. Where I'm going from there is, we got to understand our value. When you think about insuring ourselves, our life, right? You have to think about what we're taking out in the way of and understanding the value that we are, right? Not a $50,000 policy, but if you're $1 million asset, why aren't you taking out a $1 million policy, right? So the right tool where I'm going to do this is life insurance. See, that's what I learned on the job in that example I just gave you, right? And instead, I'm not talking about burial insurance or just maintaining a standard of living. I'm saying this is a way to ensure creating financial legacies, right? Creating something of significance for the future. In the book, I talk about a path to wealth as a building block process. Next slide. You see, you shouldn't just jump into Tesla or Bitcoin or all these crazy investments that if you don't have a solid foundation that includes insurance. Right, from the chart here, when you look on one side, it says, the wealth foundation. right? Then accumulation, then preservation, and distribution. This is your building process, the financial services pyramid, right? At the bottom here, what I want to share with you is about protecting and using insurance, particularly life insurance, to protect what you earn, what you own, what you owe, and those you love. See, insurance on your life is not just about putting you in the ground. So many of us have been bamboozled, misguided, led astray to believe that that's all it is. Like I said, that's not what other communities around us are solely doing. But if you don't make it home, COVID would just take you out, or an accident or a shooting takes you out and you don't make it home, will your family be set up or set back by managing your loss? See, my work now goes beyond just the repositioning of this tool to create a guaranteed, and oh, by the way, life insurance passes tax-free wealth for ourselves and our communities. It's a lot larger and a lot bigger conversation. And so this is where I want you to go. The two main things when I think about life insurance in ways that many of us have not been shown, next slide, is first to talk about protecting your income. That's what that company was talking about for me. They were trying to offset the income that they were paying me, but they also said, don't you have a policy in place to protect your income in case you don't make it home, right? So the chart here shows, it's a pretty chart. On the left side, you have a young couple, maybe don't have much in the way of savings yet. They're building together. But what they have as young people is what they call knowledge assets, right? The ability to earn and save. Ideally, as they get older, on this chart, going to the right in age, they'll invest what they earn and create financial assets, right? That's sort of the way to do it over time. And see, when you think about the one type of policy to protect the income, especially if you're gonna, like I said, worth millions, then a term policy is something that we can do that for the next 20 years or 30 years. We buy a short-term policy because you know what, that's maybe before we build the financial assets. If I don't make it home and I have a large mortgage, that's going to help set up my family in case anything happens to me, to pay off the mortgage, to make sure the kids can go to school, right? So that they don't have to carry on debt like other families and communities have been doing for so long. So that's one of the basics here that I want to talk about. They're making sure that we understand it's a sort of a marathon in life, right? 85 years, at least we're looking to live. You have to have some insurance to protect what you're earning over that time in case anything goes wrong. The next slide, I want to bring the importance of repositioning this tool for many of us of life insurance is about leaving an inheritance, right? For many reasons, the word inheritance, the actual receiving of it, has been very limited in Black and brown communities. I remember we would go out and we have a big town hall and we'd ask in the room, how many have ever received an inheritance? And so few hands go up. I'm excited to say that, it's starting to change. This conversation is starting to change now, and especially from some of our young influencers, right? They're starting to have conversations about creating, not only being the first generation to have money, but making sure that they're passing it on for the future. One I'd like to acknowledge here is Jay-Z. Remember his album 444, right? There was a song they called Legacy, 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 Legacy. His daughter asked the question, Daddy, what's a will? And he says, well, this is what protects our family money and making sure that we can pass on to you and your children what we've created in life. So where I'm going is that we're starting to talk about this. We're talking about, even spending your earnings for yourself and leaving your children life insurance. But you want to make sure that the term, like I said before, doesn't expire. So you want to make sure that you have something permanent in place. So if you live to 85, 90 years old, the term that you purchased, and many buy term and invest the difference, we don't invest the difference in many cases in brown communities, and that the term expires and we don't have anything to pass on. That's why we need to also have, I'm an advocate for having both term and permanent insurance, whole life insurance, universal life insurance, to make sure that we have something in place for when we do pass, hopefully when we outlive that term down the line. I especially want to acknowledge, these new policies called that have living benefits. I don't know if you've heard some. So policies now not only are for when you die and when you pass on to somebody else. I know many folks would say, I'm worth more dead than alive. But what the world has changed, these policies have changed now. And for many of life insurance policies, you can access the policy's face amount, not just the cash value of the builder, but the face amount. If I bought a $500,000 policy, $1 million policy, or that $2.5 million, like I mentioned, that they said I should have had for myself, right? I can access it now if I get a chronic illness, a critical illness, or a terminal illness. Just heard last week that there's some policies now that you can access if you get Alzheimer's, or if you need money for fertility treatment. So there's more to these policies of life insurance now that you need to be aware of, right? See, this is especially important when in Black and brown communities, especially, we have those underlying conditions that we talk about, right? If you know that you have a history of heart disease, and that, so you can buy a policy while you're young and healthy. I just want us to start thinking early, right? Think about protecting that your $1 million self. I think this could be a game changer for us. But I especially want us to think about it while you're young, right? It's like a parachute. It's so sad to see when people get sick and then they start looking for life insurance. They turn 50, 60, and they say, you know what, I want to leave something, but it's often too late by then. Like a parachute, you can't jump out of the plane and look for the parachute. You have to get this beforehand. So I just want to put this context, this thought in your mind about how the value of this and when to start thinking about it. That's one, as you had it on the earlier slide, I want you to think about build when you think about life insurance and not another bill. Car insurance, house insurance, that's just another bill. Build is about making sure that you create this generational wealth to pass on, right? Yes, sir.
I just want to ask a question. As it relates to, like, we're talking about families, but there's also implications for a different type of family, like your business partners.
That's right.
So you mentioned with your organization, they took out insurance on you.
Yes, sir.
And oftentimes, one of the reasons why some businesses break up or have to stop is because somebody passes, it hasn't been specified, and that key producer is not there anymore. Can you talk a little bit about that from a small business standpoint?
Certainly. So then if that person's not there anymore, the shares of that company go to the wife or to the family. These might be people who don't know anything about the business. That there are the same thing, key man policies. There are split policies that you can create for businesses to make sure that you protect the other owners in the business, that you can have on each other, that you can buy each other out, that you can make sure that the business can go on and have the resources and the expertise that it needs to survive and succeed. So there's many uses of this tool, not only for the family, but for business. I was going to also touch on using this to give to charity, right? A permanent policy you can give back to your alma mater, the Black college, your fraternity, your sorority. That this is, when you talk about the billions in endowments at Harvard and Yale, much of that money wasn't just direct cash that was given. It was life insurance policies that were donated because those individuals got to take tax write-offs when they were alive and donating it, but they also got to multiply their gift to the organization using this tool. So thank you, Herman. There are many uses here. One of the last example in this section I want to touch on is a success story or a way of successfully leveraging or using this tool. Next slide, if you would, Eric. The young brother I wanted to bring to your attention here is Nipsey Hussle. Remember Nipsey Hussle, where I want to go is that he purposely chose to use life insurance to protect and provide for his family. He passed away in March 31st, 2019. It's amazing how time flies. Folks celebrated him for his music and his businesses, his community activism. There was a whole lot of fanfare in the media about who killed him and why. But where I go is that with all those stories that were out there, I only saw two during that time. One of them's here, Black Wallet, who talked about Nipsey Hussle's $1 million life insurance policies. You see, to play this out, down the bottom here, that's his partner, Lauren London, the mother of his children. She was featured in this Laura article in 2020 for buying a $1.7 million home in Los Angeles. Right? She also got a deal with the sneaker brand Puma to expand his marathon clothing line. Right? So she's successful in her own right as an actress and the likes, but here's where I'm going. Right? If he had left her, like so many that we see, right, in our community, trying to raise money on GoFundMe, right, or looking money to get money from the record companies, or passing the plate or doing the fish fries or the car washes, right? Would she have been able to purchase that home or to continue his business? Where I'm going to say he provided for his family's home, the children's educations, her retirement, and his business continuation with what? This tool of life insurance. He knew while he was alive that his children would do better because he set them up to be better, because he had a tool of life insurance to make sure that that would happen. Because he didn't rely on anyone else and he didn't leave it to chance. So I just want to acknowledge this young brother and make sure that, especially our young folks who say, you know what, I don't have a family yet, or I've got time to get this later. We understand and see how it's been put into force. So let's keep going. If you would, next slide, I'm going to skip to rule number 6. Like I said, 3, 4, and 5 are important. I go into a lot of other investments that we didn't need to touch on tonight, but it's all things that you need to know. I think rule number 4 was one of Herman's favorite. I said, if you have a landlord and a Lexus, you have a problem. Click on that one. If you have a landlord and a Lexus, you have a problem. My point here is go into the book. It's about because you can't consume your way to wealth, right? You can't spend and thinking that you're going to get wealthy. You need to have equity and ownership. Your car depreciates. That's where I'm going. Whatever the car is, where a home appreciates. If you're renting, then all you're doing is making someone else rich. So just keeping this going in the way of this insurance planning, this insurance thinking, what we can do to raise our thought process and our engagement and our action plan. Rule number 6 says rich people plan for 3 generations. Poor people plan for Saturday night, right? Where I'm going to say, we're going to work smarter as well as harder. My parents would just say, put your head down, just work hard. At some point, you're going to work smarter. You can't just keep running around. What else can we do? What else can we look at? What else can we see that others are doing that we can catch on to, right? So, like I said, this is about looking not only at ourselves individually on this path of wealth, but what we can do for multiple generations. So the quote down here I love, and I just want to acknowledge it from former First Lady Michelle Obama. She says, we have the responsibility to live up to the legacy of those gone before us by doing all that we can to help those who will come after us. Okay. So you talk about family planning. Next slide. I asked those folks, wow, I didn't know anything about the value and the size policy I should have on myself. Tell me more. What else am I missing? What else are people doing that I need to be aware of? So one of the stories, they said, well, but where you live in Brooklyn, just one of your neighbors or many of your neighbors around you, do realize, they'll take out $1 million of life insurance on the 2 oldest in their family. And in that family of 20, the 18 others will make the payments on it. To which I said, no, of course, I'd never heard of this. How many of us have ever seen or thought of this in our community, right? So for them, like I said again, they'll take out $1 million of insurance on grandma and grandpa, and the 18 others in the family and make the payments on it. But for them, it's not about profiting off the death of grandma and grandpa, right? It's about holding them up as the matriarch and the patriarch, right? Because from that $2 million, maybe in the next 10, 20 years that grandma and grandpa may have left to live. Hopefully my children won't get it for another 50, 60 years, right? But think about it, in the next 10, 20 years, if the family receives $2 million, think about what they can do with that, right? This is just a creative way of pooling resources to create their own inheritance. And they're not talking about going out buying bags and clothes and shoes. They talk about how do we use this money to build on the family, right? So what they'll think about from that $2 million is paying for all the grandchildren's college education. The grandchildren's college education. These are folks who are not worried. You wonder, how is it some folks never have student loans, they never have to work? They're getting money this kind of way. They talk about using that $2 million to put 20% down on some homes in the neighborhoods that we live in. Where I was, when they would tell me the story, I lived in one of those brownstones, one of those row houses, like on the Cosby Show. Right? Those go for $1 million, $2 million, $3 million now. When you talk about getting 20% down on $1 million brownstone, most of us aren't going to work and save 20% down anytime soon. But they're getting it this kind of way.
Eugene, I have to just tell you, that is the key. You just said to pool the money.
Pool your resource.
Yes.
That's right.
And I think that's what we don't get that we are doing this individually.
Yes.
And we're not thinking holistically of how to prepare for our grandchildren. I have a young one going off to college, and you are right. It is a different experience when you can pay for that.
That's right.
So thank you.
Awesome. No, let me keep going. So putting 20% down on a house, right? They for $2 million, if you get $1 million brownstone, that's $200,000. You could buy 2 or 3 of them for different family members, right? These brownstones, oh, by the way, often have rental units in them. So what else are they going to do with the $2 million? They're going to create their own investment fund for family members to start their own business. You want to be a lawyer? You could start your own business. Maybe you have your office in the house, right? You want to be an accountant? We'll do that. So we can self-fund our own investments into our family. So think about this: from the $2 million policies on grandma and grandpa, we had all the college educations paid for, but we had multiple homes purchased with rental income, and we could self-fund our family members to start their own businesses. Do you see how some are using these tools to have a totally different path in life, like Latanya just said? It's about coming together and just being smart and creative in this.
So Eugene, let me just, I'm sorry to interrupt, but it's coming together, but it starts with this presentation. You have to have the vision. And the reason why I appreciate you is that you're having people think about this in a totally different way.
Yeah.
So you're talking about pooling resources, you're talking about having a vision, you're talking about ways where, just something as simple as having 20% to put down on the house, that means you avoid the insurance requirement. And nowadays, PMI, that's for the life of the loan.
That's right.
Whereas before, once you got to the 20%, you didn't have to pay after you hit that 20% threshold. So we're dealing with opportunity costs. The opportunity cost of not doing this means that we don't have the resources that are wealth building and wealth appreciation, and instead we're paying fees, we're paying taxes, interest, and things like that. So this is truly a game changer. So I'm sorry, I just had to make that observation.
Appreciate you, brother. Appreciate it. And that's the message I'm trying to bring. Like I said, I'm trying to pull the curtains back on what we've been missing that others have been doing. But also just as important, try to make it culturally relevant. So taking this example here, me and my sister went to our parents, right, and said, "Hey, wow, we just learned this whole new strategy that, like the Jewish family in Brooklyn, we want to take out a life insurance policy on y'all." And you can imagine how well that went over in the Black family, right? So the joke I always say is that they stopped returning our calls. They put extra locks on the doors, and we had to say, what, we're not trying to do anything to you here.
They start sleeping with one eye open.
That's right. Hey, what are they up to? What are they? Right? But it's about sort of planting the seed and sharing with them. You know what? Me and my sister are doing okay for ourselves. We're not trying to do anything to get this money early, right? What we want to do is like what they did. We want to help pay for your grandchildren, your great-grandchildren's college education. How wonderful would it be for them to know that my grandmother, my grandfather paid for me to be here? That's what the Rockefellers, that's what all these other communities have done for generations. We're still new at trying to figure this out. So after a while, once we got them to realize this, and this is about your children and your grandchildren and great-grandchildren, they said we like it. We like what they're doing. But like them, you won't pay for it then. So I said, okay. So I asked my agent to figure out some ways that we can do this. So here's what we ended up doing for me and my sister. We took out a $500,000 policy on my mother and our father, my mother and father, right? So both of them are insured. These are different aspects of insurance that, like I said, many of us don't know. If you insure 2 together, it lowers the cost because now you're insuring and extending possibly for 2 lives before you get the money. But here's where I'm going. We took out a $500,000 policy, and it cost me and my sister $300 a month to pay for it. A permanent policy. So as long as they live, we have this policy in force. So like they said, it's pooling, splitting it. For them, $300. I pay $150. My sister pays $150. But I ask you, what else in America can you spend $150 to get a guaranteed $500,000 tax-free at some point in the future? There's nothing else like this. Is an amazing tool that many of us don't realize and don't understand. If anything, we run the other way. And when somebody tries to tell us about life insurance, we have to wake up to the value and the potential of this, right? So where I'm going is that, you know what, the Mitchell family, the Mitchell legacy is going to be set up because my parents now on the family tree here, they have a $500,000 policy. I eventually took that $2.5 million policy on myself. The next thing I want to talk about in looking at this family tree is what we could do for our children. Next slide, if you would. So I asked the kid, well, this is amazing. What else are other folks doing that I'm missing? So I said, you know what? Another thing to think about is taking out a policy, a sizable policy on your children when they're young. They talked about creating the wings of financial freedom for them, right? So I said, tell me more. So that not a Gerber policy, right? Instead of the 529 college savings plan, I was going to put $50 in each one. Why don't you put $100 into a policy on your baby when she was born? So I took out a $250,000 policy on my daughter. It cost me $140 a month. And I only paid this for 20 years because she's that young. And it's a whole life policy. The cash value is going to build up in it. There's going to be enough after 20 years that it's going to pay for itself. But here's where I'm going. By the time she's 18 years old, this will be $20,000 built up in this. By the time she's 25, she's ready to go to college, there's $35,000 in it. By the time she's 35, there's $60,000 built up in the cash value. If we never touch the cash value, we just leave the policy there to build by itself, by the time she's 65 years old, there's going to be $750,000, $750,000 in the cash value of this policy. Talk about, you know, of course, I'm hoping nothing ever happens to her, but this is in case her health changes, right? And she can't get insurance later. In case anything happens, and or she lives to be 65, this is now $750,000 that I can make sure that I pass on to her to supplement her retirement. Like I said, these are tools that are out there that many of us never knew about. Right? Think about it. I took out $60,000 in student loans. For years, I paid $350 a month to pay that back. Imagine coming out of college, as we just mentioned, with no student loans. That's $350 you can save each month. That's times 12, $4,200 a year. Imagine when you come out of school at 21, 25, whatever, and you start investing $4,000 a year into your retirement fund instead of into your college. So that's the possibility of what we can do in passing on. Like I said, for me, it's not about leaving money. I don't want to leave money for their kids to go to waste it, to blow it. But why don't you help them invest it then? It's about you teaching them on how to be debt free, right? How to manage money to pay for the college education, that they don't waste it or blow it, that they see the value in it. Next slide. Bringing this all together. Like I say, I'm a little bit passionate about this. See, what I want to share with you about this one tool of life insurance, as Armand mentioned, many of us have never seen before. What I described for my parents, myself, and my children is a $3.5 million estate. Right? $500,000 on my parents, $2.5 million on myself, and $250,000 on each of the kids. $3.5 million, right? And that's from just the insurance, right? And so I haven't talked about the value of my home, my 401k. This is just what this one use of this one tool can do. And hopefully I'll be here to earn that $2.5 million, and I'll invest it myself, you know, and over the next 25 years. But if anything happens to me, this will continue into my family. It's called self-completing, right? With my wife, the kids can pay off the home, right? They can continue to go to college. My son's at UVA. That's $73,000 a year. $73,000 a year for 4 years. If anything happens to me, I know that he can continue to go. My daughter's looking to follow that. $1 million isn't a lot of money these days, right? So 2 kids in college, paying off but we have to understand and not get caught up in this old mindset. I was talking to a brother the other day. He's like, I've got insurance. I think I'm doing well. I have $400,000. I said, that's great. But think of it relative to what other communities may have at your age as a professional, making what you make. You think 400 is a lot, but when, like I said, if you spend it, if you play this out, right? Have you put the kids in college with $400,000? Have you sustained your spouse without having to get 2 jobs, right? Having to go out and marry somebody else just to offset the bills. That's the importance of what I'm sharing here. And the last point, when you start talking about generational estate, when you think about planning this out properly, I know you had Amy on from the estate planning side. We need a will, we need a healthcare proxy, we need a durable power of attorney to make sure that you have all these things that for so many of us we lose, right? In where I lived in Bed-Stuy, Brooklyn, how many of those brownstones, because there was not a will in place, and the person it was left to wasn't alive anymore, it got auctioned at the city. Family members never got it. There was back taxes that weren't paid. Same thing again, they auctioned, and the families never received it because it wasn't set up properly. This is the conversation we're having now, to make sure that we put the proper pieces in place, that we understand how we can multiply what we have and we can protect it and pass it on.
One thing you mentioned, the $400,000 insurance policy. Think about it like this. If it's a young family that hasn't paid off the mortgage, the kids haven't been educated, let's say they have 2 kids, $400,000 is just a salary of $40,000 over 10 years. That's not a lot of money. That it's really not a lot of money. So ensure what you're worth, what your value is. So I'm sorry, I just had to share that.
No, I love where you're going. I would say, especially in the prison, I'd ask, so what are you doing for your kids? I love my kids. I take care of my kids, but what are you doing for them in prison? But like you said, with $400,000 may sound like a lot, but it's $40,000 for 10 years. How are you offsetting babysitting if you're not there? How are you paying the bills? How are they going to afford college or down payments for their own homes to get the stepping stone? That's what we're trying to change. That's what we're trying to bring forward now as the new way to do this. Next slide, if you would. Let's keep this going. So, lastly, in this chapter, like I said, I just want to bring this home. This is something that I've watched and so often, that the ability to leapfrog ahead in life is what the tool of life insurance provides. I started off with that campaign for $50 billion, talk about financial stability, right? In case anything goes wrong, you don't make it home. You need to borrow from the cash value. It helps stability. Economic opportunity. We just said, all the opportunities that can come from this, and creating multi-generational wealth. A big part that I see that we're missing in Black and brown communities is the peace of mind that life insurance provides. The confidence, the freedom to operate differently, knowing my family's future is secure, right? I'm okay. That knowing that my family will be okay if I'm not here, that they will be better off. When I was talking to somebody, my grandmother passed and she left a little inheritance. That she said we have to do more than her. So every generation is going to do better. That's the intention here. Life insurance provides, like I said, the down payments for homes, college education, startup capital. That's a way that we can close the racial wealth gap. I think about it being a transformative lump sum. I'm gonna think about if you would have received $50,000 at some point in your life, how different would that life have been for you? $100,000, $250,000, $500,000. It might be a stretch for us to think about now, but that's what other communities are doing. We're still just passing $5,000 when somebody passes. They're passing $500,000. This is the possibility of what this tool is, what it can do, right? It's like hitting the lottery every generation, right? Thinking about, every family, you could start to plan the children moving to the next class level. If you were lower middle class, maybe you could become middle class, upper middle class. This way you can, start to compete with classmates and colleagues, really create transformational change. Next slide. Just wrapping it up here.
Pardon me, Eugene. We've
Yes,
got a
sir.
question from Cora. Is the term you used previously, or a few slides ago, pooling the coverage?
Yeah, just
Or would it
pooling
be
your
like you
resources.
setting up 6 beneficiaries on one policy or a policy on a couple?
What I mentioned was pooling your resources. So
Pooling the resources in order to cover
resources,
the
yeah. So what me and my sister
premium.
did was come together to ensure they got a policy on our parents. So we pooled our resources. There's only 2 of us. But they were saying that family that we lived next to, they had a family of 20 people who came together to say, we'll put more money in and take out a larger policy on somebody older in the family. So it was pooling the resources.
Now, related to that, are all, like in the example you used, are all 6 grandchildren listed as a beneficiary on a policy like that?
That you can do.
Yeah.
Or like the parents. If the you know that yes, you can list different beneficiaries of that policy if you own the policy. Since
to alleviate any second guessing of what one sibling or
that's
grandchild might do in the legal sense.
That's right. So this is, you don't need the will so the life insurance, you name your beneficiary of how much you wanted that 500,000 between now two kids, 250 to go to one, 250 will go to the other. There is no discrepancy. There's no arguing. That's what it was. Yes, absolutely.
So Eugene, I'm dangerous. So you get my mind racing here. So imagine that policy.
Yes, sir.
$500,000, couple mil, but the beneficiary is a trust.
Yes.
And it's a trust that's an investment vehicle, so that once it's funded, that investment vehicle, it can grow. And you could still have your heirs listed as the beneficiary. And so it continues to grow once it's got that funding, and people can benefit, but they don't have to do anything. You can set it where they get paid every 5 years, every 10 years, or what have you. That's doable, correct?
Absolutely. Now these are the next levels that we're talking about. Once you get the basics here, these are the additional pieces of the puzzle. So in that trust, like I said, you don't have to worry of giving young children $250,000 each that they're going to blow it and waste it, right? From the trust, you can assign that, when they turn 21, they'll get $50,000. By the time they turn 25, as long as they completed college, you give them something more. By the time they get married, you can start to frame out more detail on how this gets distributed. And like I said, where it gets invested, so it's not spent, but it's multiplied and invested properly to create more out of it. Yes, sir.
Thank you, sir. Okay. All right. I'm paying attention.
All right. We'll keep it going. Rule number 7 of the book: a rising tide lifts all boats. What I see the FCC is what I've been brainstorming with Herman about is trying to create this collaboration of leaders and determined believers within our community, right? To bring our individual strengths, our talents, our abilities, our experience, our understanding, because that's going to create the sustainable change. How do we learn from each other? It's iron sharpens iron. How do we understand how to apply these concepts? So if I'm going to share the insurance, Amy Griffin's going to talk about your will, your trust. Herman's going to add it into these other component parts. This is how we leverage and go to the next level. The African proverb I have here is, if you want to go fast, you go alone. But if you want to go far, you go together. Let's talk about how this next use of this tool, not only for individually, not only for the family, but what we can do for the community looks like now. So next slide, if you would, Aaron. This is going to bring us home. Right. So just in breaking down a little bit more detail of that $50 billion campaign that I created and we completed at New York Life before I left at the end of 2018. That the vision I had back when we started this in 2011 was to get 200,000 families. Like I said, we were working in the Black community, 200,000 Black families to see the value of owning at least a $250,000 life insurance policy. Remember, I said the company said I was worth 2.5 million. So I'm not even saying 2.5 million. I said 250,000. So it's not a burial policy, but it's something of significance. In fact, when I wrote this, I saw some wealth gap. I gave you the wealth gap study. It was 165,000 earlier. I saw another one that said it was $236,000. So that's where I got the $250,000 number from. But multiplying this out, 200,000 families with $250,000 of insurance, knowing that we're all going to pass at some point, right? I don't know if you didn't know, but we don't get out of life alive, right? So at some point, we're going to pass. 200,000 families, at some point in the future, are going to receive $250,000. But you insured your parents, insured yourself, insured your children. That's going to multiply out to being $50 billion of future income that those families will receive, right? Think about what can the families, the friends, and the businesses of 200,000 Black people do with $50 billion? That was the vision. This was the mission, which became the movement that the agents were trying to share this education for, right? Like I said, individually for families, you get the protection. You get savings built up. You can create wealth, tax advantages, right? This is all what life insurance provides for an individual family. But thinking about $50 billion collectively now, right? 200,000 a large number. 200,000 people, 250 creates 50 billion. Think about cycling 50 billion amongst Black-owned businesses. In addition to what you earn, in addition to your investments, in addition to your home value. This is just another income stream that many of us have not thought about. Depositing 50 billion into Black-owned banks is what we would say, right? Tithing on 50 billion into our churches. Think about this. This is about, so building, supporting, now you can really create those programs that we know are making a difference. They can be funded this kind of way. The charitable giving, the endowment creation. This was the possibility of what this program, and like I said, the more we thought about it, the more we saw the possibilities of it. This is what drove us to put more in force. Next slide. Where I want to share with you. So this was the vision, became the mission, then the movement. Over the last 10 years, I'm proud to say, of that 50 billion, over $1 billion have been paid out now in death claims. If you click it once, the first person, not the first person to pay out a check, but the first $1 million check that went to a family was paid by Lamar Boyce down in Philadelphia. See, a woman came to him as an agent, said, as a nurse, I want to make sure I have some insurance for my family. She only wanted a $100,000 whole life. As mentioned earlier, he says, well, I can combine whole life and a term policy and get you $1 million. Think about protecting your income, what you're worth, what you want to leave on, your legacy. She says, okay. It was 3 years later, she came down with some unforeseen disease and passed. He got to deliver $1 million check back to her mother for the benefit of her daughter. Now, the daughter says and understands, you know what? Mom now was a nurse. I want to be a doctor to honor her legacy. And I know that the resources are there. She made sure that I could go to any college that I want to because mommy set it up to be that way. Now we're talking about this is the outcomes and evidence that it works, that it's making a difference. If you click it one more time, click it a few more times. So where I'm going is that Guy Walker was the second one. He delivered $1 million death claim check onto as you said, a small business owner, Herman, that he had a term policy. It was about to expire, and he passed before it expired. Like I said, the policy expired, and so the guy got to deliver the $1 million minus the back premiums that he didn't pay, but he got to deliver back to the wife to maintain this business and to continue on in the wishes that he wanted. Right, the brother on the left, Everett Fox. He's the poster child for us now in this $50 billion campaign. He's actually delivered 3 $1 million checks back to Black families. And he says, these are people I grew up with. For me, this was about being an agent of change, right? So making sure that these children that are the same age as my children have a different path in life. That this is what 3 million they have found, not from a lottery ticket, but because they sat down and understood putting a plan in place to create, a sound financial future for your family is doable. And here's some others there. Tina Martin, Rod Carr, keep going if you would. But where I'm going is these are the trees of growth that have blossomed out of this program. So next slide, if you would. They're right there. I think I shared with this last time we spoke, Ramon, is that, I've become even more passionate. If I'm not passionate before, even more passionate now, right? Because of what we saw happen over the last, from 2020 from March 2020 to March 2022 with COVID-19 in this country. So where 1 million people passed across the country, 142,000 of those were African American. And so think about where I'm going with this. Could there have possibly been a triumph in the tragedy of these deaths, a heartbreaking number? But imagine if each one of those 142,000 folks would have had a $250,000 policy. In a 2-year span, 142,000 people passing with $250,000 of insurance would have created $35.6 billion for the families, friends, and businesses of 142,000 Black people. But here's what, it's sad to say, that many of us did not have insurance, right? In fact, the insurance companies got to revise down their predictions of payout because the people that were passing were elderly, Black and brown, which they knew. The elderly had small policies probably from years ago, and the Black and brown people didn't have insurance. See, it's just about being set back instead of being set up. We can't allow this to happen. For me, it's a moral case. It's a business case. It's the right thing to do to make sure that we spread this message. We create this outreach, this education for the underwriting of the companies to do this, for us to understand we need to own this, to see the value of this now. So like I said, this is where I'm at. Last slide coming up now, aligning the movements. I want to talk about the possibility of what we're doing today, leaning on each other. So when I'm challenging the agents that I'm a part of and now going across the industry to say, we created a campaign and we've already created $50 billion on the books. We've proven the concept. Where we want to go now is multiply that 10x. We want to do 500 billion as the next milestone, right? Driven by the greater good of what this can create, right? Ending the cycle of poverty. This is the possibility I see with this School of Life Insurance, to end poverty, right? Say goodbye to GoFundMe and begging to bury, right? See, this is a whole new level, as hopefully you've gotten from the presentation tonight, about creating financial freedom, access, and opportunity for our children. See, from this, like I said, now you can talk about education and schools and healthcare and wellness, building neighborhoods. We can work with the realtors out there, the Black realtors, to help. They have a program to get 2 million African Americans in homes over the next 5 years. But folks often say, where do you get the down payments from? This could be a way we get the down payments. Working with the chambers of commerce, right? There's 1 million Black businesses. Imagine we could create 1 million more. Or they could help expand their business and hire people into those 1 million businesses with the money that we can get from the insurance piece. Talk about the estate planning attorneys, making sure that we have 1 million wills and trusts out there. Like I said, 1 billion into the bank deposits. This is the possibility of like I said, coming together. All the rising tide lifts all boats. This is what we can do across the industry, I believe, if we align our thinking, align our actions, and align our movements now to the next level. So just bring it to a close. I just want to say, I just want, if you have next slide, one more, to say, you know what, this is the modern day movement that we're on now. Right, and so I say we've got to amplify the work that we've been doing and all the successes over this last 20 years. Proudly standing on the shoulders of those gone before us. But the intention from the work that I'm doing is that we pass the baton on to the next generation, this time with billions. That's the possibility I see, right? So if you've not already done so, I encourage you to get with a financial advisor to incorporate some of these life insurance strategies into your own financial plan. Right? Think about your 3 generations, your parents, yourself, and your children, right? This is about transformation. What I've been trying to do is inform, transform, and empower these communities that we're a part of, right? And just to let you know that I work with a group of professionals and they're committed to the vision, mission, and purpose and serving the communities. We're saying for us, by us. I've got a seminar response form or no request form if you want to meet with one of us or get more information. If you could learn, more of ways that you can apply this, but please let me know. Here's my email. You're gonna send me a text. Just say send me the form, and we'll follow back up with you. The last part in the next slide is the book. So here's the book I want to share. Closing the Racial Wealth Gap: 7 Untold Rules for Black Prosperity and Legacy. And like I said, if you don't have a copy, you can get it on Amazon. You can. It's going the other. Okay, it's in the beginning. It's the idea that let's understand what we've been missing that others have been doing, right? And so this has been the calling of my life and my life's work. This is what I wanted to share with you today. I'm going to end here by saying thank you to the National Foundation on Credit Counseling for this theme, for the focus, for bringing us together, and for raising the consciousness of us to connect to what's critical for our overall future financial success. If you can't tell, I'm passionate. This is what gets me up. This is what keeps me up and fired up, knowing that together we can, as individuals, together we must, as organizations, and together we will, as a collective community, close the racial wealth gap and change the financial future of all the communities for the better around us. So Herman, I'm going to pass it back on to you, my friend.
Eugene, thank you so much. So much. You've given us a lot to think about. I know, like I said before, certainly my wheels are turning. But we got a couple questions. I got one in particular, and this one might be an uncomfortable one, but this is great. But what happens when you miss, like, if a person has a policy and they have a hiccup, like what happened with the pandemic, and they get a reduction in hours or they lose their job? And what happens if they miss, say, 6 payments? Is there any recourse they have to, like, when that time comes back, or it may not come back? What are their options for not losing that investment and that coverage?
Great question. And you know, like I said, real life happens. Some of it so we don't and have not until this point made this the priority. You know, and some people, you know, the car breaks down, you know, we let the life insurance go first. Hopefully now, after this presentation, you recognize the significance of the importance of it. But if you have missed 6 payments and it's possibly lapsed, some companies will let you catch up if you reach back out to them. Some go a year. If it's not extended past a year, I think, and some will do like 2 years. You can just make up the past payments. You may have to get the new health checkup made, but there are always sometimes to catch it back up. Like I said, you know, hopefully from this presentation, you know, to realize the significance of not letting this lapse, and to make sure that, you know, we go do as much as you can to keep the payments going.
Yeah, thank you. And then the other thing that we do, basic principle of I guess, financial planning and sustaining your household, you want to have at least 6 months of reserves saved up for such a situation. So just keep that in mind. Let's see. And let's see what else we got. Because I can't see all the questions that come through here. I get some that come through here. And do you want to list any of those questions? How can we find out, or when should we ask when dealing with the company what their policy is? Or can we look it up to find out if our current policy, or when we has that policy? Do we just ask the agent, or is there a resource we can use to check?
All of the above. So whoever you purchase from, if you're still in communication with this person, if you still want to use that person, you can always ask the agent to revisit and refresh your memory about what you purchased. There's usually an 800 number. All these major companies have a whole customer service area that are there to support you on this. And likewise, like I said, if you saw my Eugene at eugenemitchell.com, the number there, we'd be happy to sit with you if you wanted to just figure out is there another set of eyes that can look at it or reassure you of what you have there.
Cool. Okay, now I gotta ask this because I'm a fairly educated brother, but you know, insurance is kind of a different language. So you've got term, which we all know is supposed to be the most affordable.
Yes.
But then there's variable, there's whole, there's universal. Can you kind of take us through like that kind of stuff?
Sure. So the term insurance, you've heard the buy term, invest the difference. It's typically for a set amount of time, 5 years, 10 years, 20 years. Some companies will go out to 30 years of insurance. So it's a way to protect. What I see that the opportunity on the large scale is to protect your income. You could protect, if you've got a small family at home, and you want to make sure that while they're in the house, before they go off to college, before they get grown, that's when you've got the greatest need. If you say, I just need some insurance for a short amount of time, that's the need that I have. A term policy is perfect to do that. It's the least expensive because, the chances are you're not going to pass over the next 10 years. Most of us live to 86, so that longer time frame, and it plays out. The companies don't pay out usually on term policies because people outlive the term. That's why it's so inexpensive. But in that time frame, your health may change. Like I said, you may get diabetes. So you may not be able to qualify for a policy after those 10 years if you only had it for 10 years. If you wanted to get another policy, right? And or like I said, the costs may go up significantly because you've gotten older. So the idea to have a permanent policy so it doesn't expire is what you're talking about: a whole life, universal life, index universal life, universal life. Those are permanent policies that you pay for your entire life. But because the company knows they're going to eventually pay out, because as long as you make the payments on it, you're going to pass at some point in the future, they make it more expensive because they're going to have to pay out the $250,000 or $500,000. So obviously, you're not going to spend $20 a month to get $500,000 in the future. It doesn't ever add up. There's no benefit to the company in doing that. So that's why they charge you more, because they know at some point you're going to pay it out. But it's going back and forth. Will you live to be 75 and that's when they pay out? Or might you get into an accident or have a heart attack at 45? But the idea is that whether you live long or if you don't live long, that there's the opportunity to. And so the whole life is just the most secure. It's the most guaranteed, sure way to do it. The universal life, they're putting some of that cash value buildup into some investments like the stock market. And so potentially you could increase the savings that you have in there. But likewise, you may get some hiccups in the market and the cash value doesn't appreciate because it was in the market. So these are the different types of policies. It's best to sit with an agent and see what I'd say a combination of these that you might best serve you at your current point, right? If you're 25 with a young family, if you're 45, with the family at the house, you have different needs. So I don't think there's any one size fits all. All you need is 250. I'm just giving the concept of the 250, but what is your individual need as a family is what you need to sit with somebody to figure out.
No, that's great. Thank you. Thank you very much.
Yes, sir.
Eugene, I want to thank you. And typically, before we close out, you've given us tremendous information. You've been an incredible resource. What we also do is we try to connect people with resources like you. So I want to share what you see up here now is our schedule for the upcoming calendar. We got an Insight in-person event on coming up on the 14th in Greensboro. No, I'm sorry, Greenville, South Carolina. And then we've got how to best utilize for our small business entrepreneurs here. How to best utilize the Small Business Administration. That's going to take place on July 27th. We've also got a small business strategy planning session. Both of those will be presented by Carl Wyndham. And the small business strategy planning session will be held on September 21st. And then what's become a tradition here, shopping responsibly in time for the holidays by our own Cora Fulmore. And that's going to take place on November 16th. So that's the calendar. There may be some additional sessions that we add, so stay tuned. Next slide, please. If you're interested in joining, if you like what you've heard and you want to get more information about the Faith-Based Alliance, if you're an organization that wants to join, please send your information to myself, hpalmer@nfcc.org, or my colleague, Pam Carter, at nfcc.org. Give us your name, email, cell phone, organization name, and organization address so we can start that conversation and get you onboarded. We'd love to have you. Next slide, please. And then if you're an individual who believes they might themselves need counseling help, or if you know of someone who might benefit from counseling help, you can get that help through the Faith-Based Alliance. You can call us at 833-691-6299, and the NFCC will connect you with one of our member agencies who will provide that counseling. Or you can hit us through the URL that's listed here, www.nfcc.org/faith-based. And the other thing you can do there, if you hit that page, you scroll to the bottom, you'll see recordings of other presentations that we've had on subjects like tax preparation, estate planning, student loan. So those are resources here. And while we're talking about resources, next slide, please. We are trying to give you access to wise counsel, insight, and resources that meet your need state, whatever you're looking for. and we use trusted resources here. So you can see you've got our website here. You've got Freddie Mac with Credit Smart Essentials, several Freddie Mac sites here. You've got the HUD site, FTC. If you need to get your, and you should do this every year to check your personal credit score, credit rating, annual credit report, and you have the Consumer Financial Protection Bureau. All these links will get you there. Avoiding financial traps. These are more resources. Beware of scams. Protection for older adults. Fannie Mae, fictitious employment scam alert. Child identity theft. These are what we make available. We're always looking for more resources. Eugene, is it okay if we share this presentation with folk?
Yes, sir.
All right. If you're interested, send out a request to my email. Again, that's hpalmer@nfcc.org. You'll get a copy of this, and these resources will be available to you through this deck. Next slide, please. All right, this is the ways you can connect with us. Next slide. Thank you. Now, I want to, again, Eugene, I can't thank you enough. I thank you for your insight, for taking of your time and being so kind with sharing with us your expertise. One thing I want everybody to understand is that we really believe in the Faith-Based Alliance, and we're excited about all the good that we can accomplish through its existence. I ask that you please spread the word, and ask for those of you who are joining us by computer, if you would be so kind, before you sign off, if you could take our 2-minute survey. We are constantly looking for ways to improve the program and would love to get your insight. Eric, do you have a magic way to get people connected to the survey?
Yes, everyone, please, if you draw your attention to the Q&A section, I've published Eugene's contact information, the link to the Faith-Based Alliance homepage, which has the past events that Herman spoke about, as well as the survey page, which is the last link that was posted, which you could either drop your email address there too to be contacted in the future, or email Herman, like he said.
I got to thank Eric Brandt. He's our producer director. He makes us look really, really smart and smooth with it. So thank you, Eric. I also want to thank, once again, the planning committee, LaTanya Gonzalez, Cora Fulmore, Reverend Kevin Murphy, and Pastor Cedric Jones. I want to thank our sponsors. That's Wells Fargo, Freddie Mac, TD Bank. Without them, certainly this could not be possible. And I want to thank you, our audience. Thank you for your time. Thank you for your interest. I really do hope that you'll stay with us and come to the next presentation. And this is going to be recorded. So if you want to see something, always there's something that we missed, go to the NFCC faith-based page and you can look at it again. Thank you. Have a wonderful evening. Yes.
Herman, just because this is Faith-Based Alliance, let me at least offer this. Thank you all so much, just to add to it, that for investing in yourselves, the time that you have put forward today. I love the concept of what's your most valuable asset, you. And I hope and pray that you recognize that you are fearfully and wonderfully made, that you were put here to glorify God. That's our theological stance. And that you would go forward recognizing that what God has blessed you with, you can be even a better steward of. So may God's love, grace, and power rest, rule, and abide with each of you and your organizations. Whatever faith stance you have, be faithful to it. God bless you. Thank you, Herman.
Thank you, Pastor Jones. There's nothing else that needs to be said. I thank you all. God bless you, and have a wonderful evening. Take care.